Well, the S&P 500 and tech-heavy NASDAQ do continue to be ruled by just a few mega-cap stocks, as we were talking about. How much longer can this dominance continue? We're bringing back in Lori Calvasina, RBC Capital Markets Head of U.S. Equity Strategy. This is a conversation we've been having for months, Lori.
Yes.
When is the dominance going to change? When is market leadership going to shift? We still haven't seen it. When are we going to see it?
I think that what you see, if you just look at the price action and we look at all these trades, it's attempting to happen. And it's just not quite breaking out. I'm an old small cap strategist, so we look at small versus large very closely. I have people sending me these, small caps have done, great on this time frame, on this week or whatever, and we've had some nice days there. And you can definitely see that part of the index starting to move. If you look within the Russell 1000, we're seeing lower quality factors start to outperform. That is something that typically happens when you're coming off of a recession low. So that makes me believe that one of the things that you need to find to really allow the kind of dominance of this mega cap growth story to unfurl a bit is just for greater faith in the recovery in 2024 to percolate. So just renewed conviction in that, pulling up some of those GDP forecasts for next year. I think kind of generally more excitement in the cyclicals, because one of the things we do see historically is that people will pile into big cap growth stocks and secular growers, and a lot of these are, sort of accused of being only benefiting from AI. I don't believe that, but that's what a lot of people are saying. But people want those secular stories when economic growth is lacking. So we're going to have to see some more excitement about the economy, I think, come back.
So what is going to fuel that excitement? Is it that we have to get past this next meeting from the Fed coming up later this month, or is it that we need to see more of these earnings that will beat expectations because the bar has been lowered?
I think most of the equity folks I talk to are, have been of the opinion for a while that the Fed was going to be higher for longer, right? So I don't think losing cuts this year, is something they were ever really looking for to begin with. I think people just want some more reconfirmation that the Fed is closer to the end. They'll tolerate another hike or two just because they want inflation under control. But it's really going to be an appreciation for the Fed, looking at the economy. I think you have to see conversations about the dual mandate come back in. You really need inflation under control a little bit more for that to happen. But I think it's going to be the details on the Fed as opposed to just whether or not they're going to hike again.
Of course, the irony about what you were just talking about with an improving economic environment being better for some of the more cyclical names is that could also still be good for big tech, right? Because those, as growth companies, they would also perhaps be seen benefiting. So it doesn't sound like it's necessarily that tech would not do well. It's just that everything else on a relative basis would do better.
Right. And, I've been overweight small cap. I have left my overweight on tech on. That was one we've had all year. Now, I'm being a little pickier in sort of the broader tech landscape, right? So a lot of internet companies are in comm services and consumer discretionary. We're neutral and underweight those sectors. So we want to be more discerning in our sort of technology bets, so to speak. So I think you want to be a little bit pickier. But I think there's nothing wrong with those companies, right? It's just they've kind of been the only game in town and the best alternative. I think that you've really, as you go through this reporting season, right, you probably need to see the banks come in less bad than feared. I think the regionals are going to be an important bellwether. One of these trades I mentioned that we've been watching have been the regional banks against the NASDAQ 100 or just the bigger cap banks against the NASDAQ 100. And those are sort of at past inflections. And you can see the banks trying to stabilize as they've sort of come back to these places where they inflected in the past. So I think it kind of all adds up. I think it's the consumer, the economy, and I think it's the banks themselves. We talked to Gerard earlier, but John Arfstrom, our regional bank analyst, has talked about just already needing a reset, right, on this quarter. And that is often, what gets rallies started, right, when things are less bad than feared and you kind of get all the bad news in the numbers.
Okay, a reset. Not a Control-Alt-Delete, but a reset.
Right, right.
All right. Lori Calvasina, thank you so much for joining us this morning, RBC Capital Markets Head of U.S. Equity Strategy.